Hello, this is Patrick White from AA Commodities and Investments with your Tuesday, March 31st market update. So, as you know, there is significant risk in trading futures and options, but that's what you got me here for. So, on today's closing trade, we had May corn up 2 cents at 4.57 and 3/4, with December up just 1/4 cent today at 4.84 1/4. We had May soybeans up 11 1/4 cents at 11.71 with a high of 11.77 and 3/4. Then we had November up 13.5 at 11.57 1/2 with a high of 11.64 even. And then we had wheat up 9 to in the front months, and then like 5 to 6 cents in the back months here in like the December contract. So the big news of the week was the Quarterly Stocks and Prospective Plantings report. Not a whole lot of surprises here on the Quarterly Stocks report. We had pretty much everything coming in right along expectations, just a little bit higher in the soybeans there, but overall just right in on what the market already had priced in. So the bigger news of the week was the Prospective Plantings report here. We had corn acres coming in at 95.338 million acres, and that was 967,000 over expectations of the 94.371, but that was still 3.45 million acres less than last year. Bean acres were reported 849,000 acres less than expectations. They were reported at 84.7 million, but that was 3.485 million more than last year. And then wheat was 1.528 million acres lower than last year and 986,000 acres less than expected. So as far as the influence of the prospective planting report on corn supply and demand and bean supply and demand here, if we have 95.338 million acres of corn planted with 87.23 million harvested and 183 bushel yield, if you use all the demand figures that we saw in the USDA Outlook Forum, you end up with like a 2.05 or 2,045,000,000 bushel carryout with a stocks-to-use ratio of 12.73%. I mean, that's a pretty healthy stocks-to-use ratio. It's definitely not overdone, but it's a far cry from being under that 10%. In terms of getting traders excited to rally it. So we've still got ample supplies of corn, and that definitely stems from the higher acreage number that we saw here today, the higher than expected. And then on the bean side of things, it's kind of just the opposite. So ended up with the 84.7 million acres planted, and that leaves us with 83.43 million harvested with that trend line yield of 53 bushels to the acre. Our 350 million bushel carry-in, and then all of our demand numbers from that Ag Outlook Forum as well. That gives us an ending stocks of 327 million bushels. And with our demand that's been increasing overall over these last few years, our stocks to use ratio is 7.34%. So that would be definitely why beans rallied, 13.5 cents, led by the November contract here today, because that's a lot tighter of a stocks to use ratio than a lot of people are used to seeing in soybeans. That's for sure. So looking at the May corn chart here, we haven't really been rallying too much. We've kind of just been consolidating towards the upper end. The market really can't sell off too far, though. We've been holding like that 450, like the low 450s really, really well. And we've got good residual demand. We've got good exports. We've got good ethanol demand and things like that. We've got good feed demand. And overall, you really just can't keep this market down because, when it does see these setbacks, you get the demand to help prop it back up again. But overall, we still haven't had the leadership either in the oil market or in just fertilizer fears in general to get this market up surpassing that high that we made here earlier in the month at 476. So looking at the May soybean chart, we've just been consolidating from this 1155 on this bottom end to 1175 to 1180 on the top end. So really just kind of a 20-cent trading range there. And at some point we are going to break out of this range. It's just a question of if it's going to go back up and try and test this gap before it had that limit down day on the 16th. That gap was right around that 1225 area. If we break down below there, we would have to take out that 1155 to 1150, and then I believe we would trade down right around that 1115 area and find some decent support down there. So overall, just really consolidating from that, still from that limit down day when the U.S. and China announced that they were going to delay their trade meeting on March 16th. So thanks for watching and have a great week. If you want to talk markets anytime, give us a call, 712-262-7606, or shoot me a text at 712-260-2387.